This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry, Lutz, and today is 3/31/21, and this is show number 236, last trading day of the quarter. Nick, you've said before they call this window dressing?
That's right. That's what we call it, window dressing. It's when you get into the final few days of the quarter, the market starts to move up a little bit, rallies higher, usually into the end of the quarter. And what happens is a lot of mutual funds, could be hedge funds, any institution, they want to show that they own certain stocks in their portfolio. It's illegal, actually, but it goes on every month. It's been going on for as long as I've been around, and I'm sure it's going to go on and continue forever. But yep, this is what we call window dressing, and it's really just a markup into the end of the quarter.
Well, you know what, Nick, in light of what's gone on in the past week with hedge funds blowing up, and like you say, where there's one, there's 1,000, these windows need a lot of dressing.
They do, and they're getting it. They're getting it. Even today, we're looking at the NASDAQ Composite having a big pop today, up 1.68%. So that is leading the major indexes higher. That's been the big laggard recently, especially as yields go up. We see technology stocks really lagging, but the tech-heavy NASDAQ Composite today is the big winner, and yields are only down 1.5 basis points on the 10-year today. So it goes to show you, I think this is all window dressing taking place.
All right, so we've got the old guy in the White House who's going to be announcing a $2 trillion infrastructure spending plan. I think Congress loves to spend money, but they don't like to raise taxes.
Yeah, well, they're going to have to do both on this one. But we will later today, I believe it's at 4 o'clock. I'm not sure the exact time, but President Biden will unveil his $2 trillion infrastructure spending plan. I believe that they're going to also include the tax increases to help finance the deal. So we'll find out a little bit about them. I did see earlier in some earlier remarks that looks like the corporate tax rate will go up to 28%, and that's a pretty big increase from where we are now. But the real story here is going to see we're going to see where this money's really going, how much pork is in this so-called spending plan. If it's anything like the COVID relief bill, we're in for a world of trouble as we're just creating more debt. We're going to be over 30 trillion. We're probably there now. And honestly, you start to raise these taxes, that just takes more. We're built on consumer spending. And if the consumer doesn't continue to spend, you're going to have big problems out here. We already have seen a big increase in gasoline. I mean, it's gone up $1 in the last 50 days. So I think that's $1 a gallon. That's a big hit for a lot of people. So again, that's just another tax that takes money out of the pockets of the people. And we'll see where we go. But market does love cheap money. And right now we're getting an end of quarter pop. But my caution flag is higher than ever right now. I'm waving about 5 of them and telling everybody, be careful here.
Yeah, be careful. And really, I just remember Will Rogers saying anytime Congress makes a joke, it becomes a law. And anytime they make a law, it's a joke. And that's what we're seeing now, because it's all going to slush funds, going to their buddies, going to extremist organizations, and all of that, not really doing any good. I mean, it'd be great if we could build a couple more tunnels in New York, but they can't seem to figure out how to do that. All these things, it's not going to rescue New York City or New York State. It's just going to reward incompetence and downright mismanagement, of which those two states are abundant examples. Hey, I don't know if you caught the article, and I don't want to really get into politics, but there was a hit piece on our governor in Florida saying that Florida was grossly understating the number of COVID deaths because there's this excess death that the CDC measures, supposedly the increase in deaths from the year before, from 2019, 2020, and then from 20 to 21. And they're saying that Florida's not reporting them, an extra 5,000 deaths that they just assume are due to COVID, but we don't really know that for a fact. And the fact is that New York, California, Illinois, 26 other states have higher excess deaths than Florida. So I only mention it as an admonition that you can't always believe what you read.
Yeah, I'd be honest. I try not to even look at too many things now. I don't believe a single thing out there. I don't really believe anything the media reports at all. I mean, it's honestly, I don't even think we have free press anymore. So it's sad to say, but that's my take on it. So I always tell everybody, just do your own due diligence. Fortunately, I live live next door to doctors. I get lots of reports, people that are in the actual ER, people that are around seeing patients, and they honestly don't even think COVID's a big deal at this stage of the game, and they haven't thought it in basically 6 or 7 months. Now, some of them are very, very concerned and nervous Nellies, but honestly, things have been very, very good in the state of Florida, and I'm very, very grateful to be a resident of the state.
Yeah, well, that's one of the reasons I moved here, because I had a feeling things would be better here than elsewhere in the country when the ultimate event occurred. Hey, gold and silver, they're spiking big today after being slammed for the past week.
Yeah, especially yesterday, they were down sizably, and today we're seeing a very, very good reaction back in gold. The GLD is up about $2. That's a 1.26% gain, and then you have gold futures up over 1%, trading up about 18 points right now. So very good little move back up. And, yesterday we talked about that pattern. I said, basically, we're retesting the March lows. And if we come out of this, we'll come out of it with a W pattern. And that's a very, very bullish chart formation. So I think traders should keep an eye on that. We're also getting a really good pop today in the gold mining stocks. Gold miners via the GDX, which is a gold miners ETF, up about 1.9% right now. And that's a very, very strong move. And that's been pulling back, but it has a very defined higher low on the daily chart, which is also another bullish formation. So I like gold down here. And even when it was getting beat up, I said, I still like it down here. So I'm going to stick with my trade.
All right. You've held steadfast, Nick, and for good reason, too. And, when you see silver get down below $25 the ounce, you got to kind of shake your head and think, if only I could really buy it at that price. But when you see prices decline like that, premiums make up the difference.
They do. And, I was just looking last night at the silver demand for the physical metal. It's still off the charts. I mean, people just want it. And again, we don't really see it reflecting in the futures price, but I do see that physical demand is out there.
Hey, well, the fact is, when you can buy the 1,000-ounce bars that are on COMEX, and then you can sell the metal at 24, it's just a really great arbitrage for those who have the sophistication to do it, right?
That's right. And again, if you get to see silver dip and it gets down, if silver futures get down to around the low 20s, I mean, it's probably a time to just swallow up as much as you can, gobble it up if you can, because I still think it's the one commodity that is being driven down, but ultimately that's where you want to be going forward.
Hey, and let's not forget that every other commodity over the past 41 or 2 years has made a new high. The only one that hasn't is the shiny metal.
That's right. That's well said. And again, if you take a look at silver, we went up this year just a little bit above 30, but the 2011 top is really around $49.82, which is, we'll just round it up to $50. That hasn't even come close. But if this just consolidates the way it's doing on a big monthly time frame, on a quarterly chart time frame, this is projecting much, much higher in the next few years.
Agreed. I could not agree with you more, Nick. Hey, that's it for today. Make sure you go over to inthemoneystocks.com. Take a look at what Nick has to offer. He probably still got a little bit of time for that massive trade of the year, perhaps trade of the decade. Inthemoneystocks.com. Twitter feeds at ITMS, at Nick Santiago 01, at Kerry Lutz. Email KL@KerryLutz.com. We're saving up your emails. We'll get to them tomorrow. Thursday, it's probably going to be a light day. You think it's going to be a light trading day, Nick?
I would
weekend?
Sure. I would expect it, as long as we don't have any major geopolitical event. Tomorrow should be, active in the morning, and then once you get to the afternoon, it'll be very, very quiet going into the Good Friday holiday.
Yeah, that's what we expect because the A team of traders takes the day off generally, and they're not going to really go to their workstations unless something major happens. That means that the B team's in charge, and nothing much happens when the B team's working the screens.
Yeah, when the JV squad's in town, you really just want things to stay steady. Don't go too much. Don't go down too much. Just hold the reins.
Yeah, they're told, be careful not to spill your coffee into the keyboard and execute a big bum trade. They're given their orders, and we know on the B team, their risk tolerance for the B traders is way, way less, probably a tenth of the risk tolerance on the A trades, right? So
that's correct.
So you have to see a calmer market almost by definition. Although now, there are no vacations and there's no work days, it's like after COVID, none of that seems to matter. So I don't know what to think about it, but probably tomorrow, everybody will take a much needed rest from the volatility and the stress of the past couple of weeks, and that will lead to low volume and low volatility, and maybe you can glean seen something of the future direction when there's the major guys aren't in there mucking up the water next.
Yeah, and just even today, the volume is very, very light again. So we saw lighter volume yesterday. Today, the NASDAQ is catching a big bid. The S&P Spiders volume has really dropped off. So I think tomorrow would just be more of the same. And, when we get back to our desk next week, things will get back in action.
Agreed. All right. So just send in those emails, kl@kerrylutz.com. We'll catch some tomorrow. And Nick, you be well. We'll talk to you tomorrow, which will be like a Friday for us.
Yes. Thank you, Kerry, and have a great day.
And so concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. Be sure to go to his website, inthemoneystocks.com. Don't forget the Twitter feeds @ITMS and @NickSantiago01.